We're talking gold now with one of the speakers here at the San Francisco Hard Asset Show, Rohit Savant. He's a senior analyst over at CPM Group. Rohit, thank you so much for being with me.
Thank you for having me.
So before we get into your conversation and we look at a 2013 outlook for gold, Diwali wraps up today, Friday. Do we have any reports as to whether buying was what was anticipated?
We haven't received any hard figures because it just ended as of yesterday. But what we are hearing is that we're actually hearing mixed reports. We are seeing some strength in physical demand. One thing that we did see, or what we're hearing about, is an increase in demand for gold ETFs, which is a new thing. Indians haven't been buying gold ETFs per se for Diwali, which is a relatively new twist to the whole demand side. But it's good. There was strong increases in demand in that sector, and in terms of physical demand, like I said, we've been getting mixed reports in terms of.
I find that really interesting. So in terms of gift giving, we're seeing an increase in ETFs. It's harder to wrap than physical bullion, though, Rohit.
Yeah, no, it's less for gift giving, and actually on the first day of Diwali, what they do is they buy gold because it's considered good luck for the full year.
Okay.
So it's you really buy the ETF for yourself. Okay. And so that's the kind of buying that you've been seeing for the past couple of years. In fact, the strength in demand was enough that this year that day fell on Sunday, and they kept trading open on Sunday so that people could actually buy those ETFs.
Well, I was speaking to some analysts who were telling me that if we didn't see buying really pick up during Diwali, that could really hurt gold prices.
If it hurts gold prices, it might help demand from the wedding season, which is coming up over the next week. Lower gold prices would definitely be something that would be welcomed, because the wedding season is again a big gold buying time. And if prices come off, especially given that the rupee is kind of weak against the US dollar, so that's already not helping the demand. So if the price does come off, that would definitely be something that would be supportive.
Okay, so gold is not rising in terms of rupee terms?
It actually was near record highs.
Okay.
But that's because the rupee is crumbling,
Right.
not so much because gold was doing well.
Right. So let's look at the broader outlook for gold right now for 2013. What's your sentiment?
We actually expect gold prices to soften from where they are right now. One reason we think that prices would soften is because a lot of things that investors have been, citing as reasons for gold prices to go up, we think is already baked into the price.
Okay.
And so we think that is there needs to be some sort of a correction between what's happening in the market and what investors have been doing to the gold price. If you look at inflation, which is one of the, this expectation of an increased amount of inflation going forward, yeah, there might be an increase in inflation, but right now the gold price is reflecting that and much more.
Okay.
So the price needs to sort of come down a little bit from where it is to, make sense.
Okay. So how much of a role will the U.S. dollar index hit a 2-month high today play a role in perhaps gold's future corrections?
The U.S. dollar index or the U.S. dollar and gold do sometimes trade inversely with one another. That said, there are times when they move up and lower at the same time. How much of a role would it play? It would definitely weigh on gold prices. So if gold prices were to rise more strongly, a stronger dollar would definitely hold that back a little bit. We have not been as negative on the US dollar as a lot of market participants have been.
Right.
We don't think that, it's already seen in the market. Every time things go wrong, investors run towards the US dollar. So even a downgrade of US debt didn't really result in the dollar crashing. It actually went up.
So Rohit, going back to the gold price, I know CPM had projected or was looking at an annual average of 1677. Are you sticking to that for 2012?
Yes. We're sticking to 1677 for gold for this year, and then we expect gold prices to soften over next year to about 1666.
Okay. So I know people are going to say, well, is that bearish?
We don't look at it as bearish. We look at it as it's still extremely high when you look at
Right.
where gold prices have been not so long back. So it's still pretty strong. No, we don't think gold prices are going above $2,000 over the next couple.
But based on what? Why don't you think it could rally to those prices?
We just think that a lot of the things that everyone thinks would be reasons for gold prices to go up there already in the gold price.
But how about like tensions in Middle East that seem to be escalating now, or the possibility of a QE4?
Okay, so the monetary easing or the QE4 is not going to have as strong an impact, and I think that's already been seen. Like when you had the first round of monetary easing, there was like a sharp response from gold prices, and then with every new round of monetary easing, you actually saw the impact on gold prices being a lot smaller. So any more monetary easing, it's just going to be like not going to have as strong an impact on the gold price. As far as tensions in the Middle East are concerned, supportive of gold prices, but I don't think that it warrants gold prices above $2,000. I mean, even if it goes back to 1,800 on a spike and then comes back off, it's still not going above 2,000.
Fair enough. Finally, Rohit, I need to ask you, you were the LBMA winner in 2011 for best forecast for palladium and platinum. Can we just get some of your thoughts on those metals for 2013?
Sure. For both of those metals, actually, we think that there might be some price weakness in the first half of the year. You actually have conflicting fundamentals for those metals. You have supportive supply side fundamentals because you have all these issues in South Africa, which have been resolved for now, but there's no reason to believe that they won't pop back up, anytime soon.
Right. Well, we're seeing the tensions at Amplats. There's maybe resuming next week. So.
Right. So, I mean, and a lot of the other things, I mean, labor is one issue.
Right.
You have infrastructure issues. You have a lot of policy issues. So things there don't look that good. So on the supply side, the fundamentals are definitely supportive of prices. On the fabrication demand side, there is this growing concern that if economic growth slows in the first half of next year, which it could, fabrication demand would get hit. Nonetheless, in the next few months, investors are going to be perceiving this expectation of a slower economic growth in the first half of next year, which would weigh on the PGM prices.
All right, Rohit, thank you so much for your thoughts today.
Thank you. Thank you.
And thanks for watching our continuous coverage from the San Francisco Hard Asset Show. We'll have more for you. In the meantime, you can email me any comments or questions at newsfeedback@kitco.com, or you can tweet me at Daniela Cambone. Thanks for watching.